Despite some scattered rains across the Corn Belt, the drought continues. With this Dateline drought update, I'm Andy Vance from the Feedstuffs newsroom, in for Max Armstrong. Our coverage of Drought 2012 is brought to you by Genuity's Drought Guard Hybrids. Well, despite some scattered rains and out-and-out storm events across parts of the Corn Belt and upper Midwest, Drought 2012 continues more or less unabated. Taking a look at the outlook for the coming months from the U.S. Drought Monitor, the picture for the drought intensifying or at least holding steady certainly appears to be with us for quite some time. And as this week's crop condition ratings bear out from the National Agricultural Statistics Service, the grip of drought, even if some timely rains happen to make their way our direction, has likely already left its fingerprints. Take, for example, corn rapidly approaching maturity, now in a 45% poor to very poor condition rating. In fact, only 3% of corn is rated excellent and just 26% rated good to excellent. Those top two categories lost a collective 5 percentage points week over week in Monday evening's report. 86% of corn is now pollinated, 22% in the dough stage, and 6% of corn already showing dent. That, of course, is far afield ahead of the 2% we'd see on a normal 5-year average. Soybeans telling a similar tale. While 79% of the soybean crop is now blooming compared to 60% a year ago, 36% are now setting pods compared to just 19% on the 5-year average. 31% of soybeans rated in that good to excellent category, a dip of 3 points week over week, but just 4% of soybeans are now rated excellent, and 35%, more than a third of the country, rated in poor to very poor condition. Secretary of Agriculture Tom Vilsack this week announced some additional flexibility and assistance from the U.S. Department of Agriculture's major conservation programming, aimed at helping livestock producers who may be the worst off in this drought, as there's no crop insurance for hay or grazing. The most widespread drought in 7 decades has the Secretary and a lot of other folks concerned about feeders and livestock raisers. The Secretary announced plans to encourage crop insurance companies to provide some short-term grace period for farmers on their unpaid insurance premiums, as some farming families can be expected to struggle to make ends meet this year. Secretary is also allowing for some emergency haying and grazing on Conservation Reserve Program lands, and is taking a review of the Environmental Quality Incentives Program and Wetlands Reserve Programs to see how those contracts can be altered or modified in a way to allow some additional relief, if you will, for livestock producers in terms of facilities, watering, water conservation, etc. A lot more on the story, of course, and the markets today had a very interesting turn of events. For more on that, here's Farm Futures' Bryce Knorr.
Red ink flowed across the markets again on Tuesday, but while losses were heavy, the ability of grains to firm off limit-down levels alleviated some of the pain for growers and also set up a more positive chart outlook. That was especially true for corn. Follow-through selling emerged during the overnight session, despite weekly crop ratings that showed another severe decline. Losses were fairly subdued for September corn until chart support at the steep uptrend line around 789 gave way a half hour before trading in the pit started. Then the dike burst, sending prices down their daily trading limit until around 12:05. That's when the Reuters news agency released results of its latest poll of analysts, including Farm Futures, for current yields and production. The average guess put the crop at 11.4 billion bushels. We're down to 10.8 billion, levels that apparently caught bears off guard. Corn moved off limit, climbing back to close at 790, down 24, but still within its old steep channel from June and July. December corn fared even better. It followed September lower in sympathy, filling last week's key 749 gap, but when prices came back, December firmed strong, ending just 7 1/4 lower at 778 1/4. The cause of the selling in part was rain on the radar screen overnight as storms erupted from the Dakotas into northern Illinois. More storms will move through the Midwest the next couple of days, but the Central Plains will continue to be bypassed with hot temperatures persisting there. Midday weather maps also took some of the moisture out of the forecast for the next 2 weeks, keeping temperatures above average. Still, rains were expected to help soybeans more than corn in northern and eastern areas of the Midwest, pressuring the soy complex again today. November futures were able to move off their 70-cent limit after locking up for an hour, but plummeted through support at the steep uptrend line that's kept the rally in place since June. Futures filled and closed above a gap at 15.61 1/4, but need to move higher quickly now to avoid more chart damage. That Reuters poll put the bean crop at 2.9 billion bushels, around 200 million more than I currently project. Wheat prices again were content to follow in whatever direction corn and beans led, and that was sharply lower again at all three exchanges. Futures finished well off lows, but still lost more than 30 cents a bushel and violated their own rally support lines. The annual spring wheat crop tour found generally good conditions today. Keep up with the drought situation across the country by visiting www.datelinedrought.com.